Okay, thanks very much. So just as a quick disclaimer, and that's for my Oga, Professor Agbaje. Professor Agbaje, we were together last week in Abidjan for the RSA conference. The majority of the slides that I will show today, you have seen them again already last week in Abidjan as part of our SERVIR keynote. So please refrain from answering the questions because you already know the answers. But there are a few other elements that I'll expand on a little bit. Thanks very much. So I was invited by Erin to give a quick talk on space for inclusive finance, and I think many of you are familiar with SERVIR. So I will just spend 1 or 2 minutes to give you a little bit of background on SERVIR. First of all, know that SERVIR is a flagship program of USAID and the National Atmospheric and Space Administration, Aeronautics and Space Administration, sorry, in the USA, NASA, with the trademark of connecting space to village, and investing in a number of thematic areas that you can see below the satellite in this schematic, being ecosystem, carbon management, water security, agriculture, food security, weather and climate resilience, as well as air quality. There's a number of regions that are covered by SERVIR. We are in the West Africa region, for which ICRISAT is the lead implementer. There are 4 other regions that are currently covered, plus activities in East and Southern Africa. And the most recent kid on the block is the Central America region, which was launched yesterday from Catie in Costa Rica. Very quickly, those are the partners that intervene in SERVIR. You can see that it is a blend of public and private partners. There are a certain number of institutions that are involved also in the civil society, including national and international NGOs. And one of the interesting features is that in the West Africa Consortium, we have the largest consortium by number of members inside the SERVIR ecosystem. So it means that our hub relies a lot on partner institutions to design, develop, and deliver services to categories of users. I can cite Agrimet and the SILS, Afrigist, SERVIR at University of Ghana, Centre de Suivi Écologique in Senegal, the African Institute for Mathematical Sciences, ISESTEL in Burkina Faso, and we also have support from 2 US academic partners, Columbia University and University of Florida. So with this, I'm done with the boilerplate information about SERVIR. And I have a quick question for you. So please don't raise your hand, but speak directly. Whoever is interested. Of those 5 pictures, which one is the odd one? From the first to the 5th on the left. Anyone? 1, 2, 3. Going once. Going twice. You have to speak up because I cannot see if someone types or writes.
Do you mean which one doesn't fit? Like which one doesn't go
which
together?
one is the odd one? You know, it's like the kids' games.
The technology, I think the first to the right side, maybe doesn't fit.
Yes, the
So
first
you
on
would say
the
one on
those looking at the
the
computer.
Yeah.
The one with the people looking at the computer. All right.
Right.
Yes.
Okay, well, that's pretty good. So you did better than the RC folks last week because they identified the second from the right as being the odd one because it was the only one that didn't have people in it. But in fact, you're right. The one that I wanted to point to is the one on the right because it's the only one where we have people who are really not in the natural conditions in the field and working in more of an office space. And this, in fact, is a service area that we have proposed in SERVIR West Africa. That is the financial instruments. And I'll come back to that because I will explain a little bit why we have come to propose this and why USAID, who is funding SERVIR West Africa, also accepted. A quick background also on the context in which we are doing this. You know, in Africa, we have the African Space Policy, of which the different 6 objectives are listed in rows, and all the different columns outline for each objective the different sub-objectives or targets that the African Space Policy aims to achieve. The ones that are highlighted in cyan color, light blue, are the ones for which SERVIR we think is making significant contributions. And one that I want to point your attention to is the one we call developing the regional market on the 3rd line. Quite serendipitously, we named our SERVIR West Africa hub developing or building the regional Earth observation marketplace. And you will see that it is, we didn't have knowledge of the African space policy at the time, but one of the many aspects that deal with this marketplace is the need to build services that actually help West Africa achieve a certain form of sustainable industrial development. And that can be mostly done through research and development linked to public-private partnerships, but also building on what we call indigenous products and services. So a lot of the DNA of SERVIR, which we can find in the upper right schematic here, that is based on demand, that is based on continuously assessing users' needs and ensuring that throughout the design, development, and delivery stages, we ensure maximum fitness with those requirements. We have developed a concept we call industrialization of services. Industrialization means delivering the result that the user expects. And the theory of change schematic that you see on the left-hand side for West Africa aims for us to achieve a self-sustaining regional Earth observation service ecosystem, which is buttressed by industrial-grade capacity for EO applications, but also by public-private sector-led economies of scale across economic sectors. And one of the aspects that I want to, for example, emphasize is that in doing this, we try not only to ensure that what we do is demand-led, what we do meets the requirements of the users, but at any point in time, that it meets a certain level of standard in terms of the industrialization and the readiness levels. So one thing is to ensure that you know, the services you develop are continuously relevant, they're reproducible, they're repeatable, the workflows are error-free, they're resilient to failures, for example, in the breakdown of a satellite stream, that inconsistency are resolved and that uncertainties are quantified. One approach, and I will be done with this shortly, is the schematic you find on the right-hand side is a generalization of the readiness levels approach, which many of you know, which has been essentially a DNA also of NASA, where we try from the ideation stage all the way to operations to grade where does the service stand. And this we can do not only at an application or technology level, as you see on one of the 6 dimensions of this polograph, but you can also do it at a business or customer level or in terms of IPR. Now, I will jump into the topic of today, but before I do so, one of the things that we do in SERVIR is subject all the services that we have in West Africa to a kind of a stage gating process that is built on this readiness level. And you will recognize that this is the kind of very engineering focused approach that has been used for hardware like rocket development. And you see the red stages that are typically design level, followed by the orange ones that are typically development level, and the green ones that are delivery. And these V1 and V2 sort of go, no-go levels where we validate in the first place that the service we build is the right service for the needs of the users, and the V2 level, which is the verification where we confirm that what we have done is actually meeting the standards that we have set forth. This looks very nice, but in fact, the world in which we build services is much more complex. And this Cinefin framework that you see on this slide shows that what you do when you do rocket design is mostly in the lower right quadrant, where you have very obvious objectives. You have clear cause and effect between what you build and the value that it delivers. But what you do when you develop Earth observation services for example, smallholders in agriculture, you're dealing with systems that are much more complicated and often complex, because the relationship between what you do and what you deliver in terms of value to the user is not always straightforward. And I often cite an author from our colleagues at CSIRO who said that information is only of value to decision makers if it reduces the uncertainty and the risks that are associated with our choices. So this slide is to just remind us that when we develop EO services, we have to be very mindful of the complexity of the context in which we work. And oftentimes we have to think in systems and ask the right questions before we develop a service. So I have a last quick test for you. You have here two propositions, one in orange and one in green. And my question to you is, which one of those two is the most sophisticated technology in your opinion? Would it be the orange or would it be the green? Anyone? Speak
I
up.
would say the orange.
Orange.
Okay.
Orange.
All right. Well, you're doing better than Arce again. I'm sorry. I'm sorry and happy also to say that I have the same feeling. So the first line is the idea where is a schematic that you say that would say that you have a donor that comes with a grant, and you build a very sophisticated system based on, for example, satellite technology or cloud computing to generate, for example, advisories that it would disseminate through an SMS-based system or other ways to stakeholders and estimate that and hope that they will be happy to receive valuable information. The second one, and this one is actually based on an experience we had with predictions of rainfall, is that we realize that satellites usually tend to overestimate low rainfall amounts. They tend to underestimate large rainfall amounts, especially at the tail ends of the growing season when it's the most useful. And we decided instead to develop a very simple IoT rain gauge that you can see with the second schematic, the second little icon. And what we're looking for now is an option to produce very cheap IoT rain gauges at a cost of $50 a piece, the cost of which can help the implementation at scale of which can help reduce, for example, basis risk in parametric insurance, and therefore reduce the cost of credit provision to farmers, so the interest rate on credit. And why is this important is because a simple frugal tech instrument can actually help you make more money available to farmers, which has a much more tangible impact on their capability to, for example, buy fertilizer. Whereas the first one, you're never sure whether an advisory, for example, to sow now or sow later is going to be actionable, because you don't know whether the system is capable of delivering the inputs that the advisory recommends. And this is all based on a big story, and I won't get into details now, but it goes back to the 1980s when the Swiss corporation in Mali collaborated, set up a public-private partnership between the National Met and a public bucket company to produce what we call the Sanji Soumanan, which is this $5, $6 farmer rain gauge that has now scaled throughout West Africa and even in some other countries on the continent, and which is now the basis for rainfall being measured at a village level by farmers and helping simply de-risk the farmers' own investments in agri. So this whole story to tell you that developing solutions in complex systems through, for example, Earth observation requires a quite elaborate understanding of the system we work with. And coming to financial instruments now, if you look at the recent evolution of technology and investment, you will see that from the STARS project, which was funded in 2016 by the Gates Foundation on spurring a transformation for agriculture through remote sensing, through investment by the Netherlands Space Office and the Platform for Inclusive Finance in 2017, to the UK Space Office in 2020 and ESA in 2021, there has been an increasing investment of different space agencies into looking how you can use Earth observation systems for making funding and finance more affordable for smallholders. And that's critical because in many countries in Africa, credit is prohibitively expensive and farmers very often default on it. Why is this important? If you look at the Agenda 2063 of the African Union, the one that has this tagline, "The Africa We Want," we realize that if we double population in the coming 20 to 30 years, essentially between now and 2063, or sort of, we cannot feed our continent without significantly increasing the investment in soil fertility. You know, right now we're using 13 kgs of nitrogen per hectare, where in Asia, they're already above 100 kgs. And you cannot make fertilizer available to smallholders if you're not capable of financing them at an affordable rate. But if you want to finance smallholders, they have to be known, and banks typically don't invest in them. They're very risk averse, probably even more so than the farmers themselves. And our interest is to understand how can Earth observation help these partners, these development partners who have agency to transform the system to invest. So to do that, you need to realize that the ecosystem in which smallholders increasingly intervene is one in which their crop production is linked to markets and to contracts. And the way the Earth observation can provide information rather than saying, oh, I see that this field is a little bit not performing well, could you apply a little more organic manure into that field? The question comes at a higher level in the whole value chain, which is to see how, instead of trying to prescribe or recommend or provide an advisory at the landscape level, can I work with EO to make the cost of credit for the entire value chain much lower and much more affordable? So that is the kind of ecosystem that we are looking at, in which our user is not necessarily the farmer himself or herself, but can be a bank or a microcredit institution or an insurer or some other partner who's intervening in structuring the agricultural value chain. So one of the typical questions we get is, how can Earth observation reduce the costs of qualifying stakeholder compliance with good practice? This is the kind of process that we follow, where you will see that in a cropping cycle, with a number of satellite overpasses that are showing in column, some of them may see the surface, some of them may be cloudy, and they will allow you to drive some information about the individual field, in which you could estimate that the farmer, for example, during the land offsetting or the parcel flooding stage, has completed a specific management, I would say a mandatory management step in the crop management cycle. So the idea here is that we want, because we know that EO can see individual plots now, whenever they're like half a hectare going up, even with the kind of imagery from Copernicus, at 10 meters, Sentinel-2 and 1. What we're interested in is assessing from EO whether a specific management step has been completed before for example, a digital credit installment through a platform like M-Pesa in Kenya can actually be released. And this is important because it allows a financing partner to disaggregate the provision of credit over time and also over space. And that's significant because right now what they do is they provide credit in bulk at the start of a season, or sometimes, as you will see in a minute, after the start of the season, to a whole bunch of farmers, a union, a cooperative, or whatever, and then they have very little control over what's happening with that money. What we want to do is to build systems in which we can actually verify whether the management practice that the farmers have put in place not only provide evidence for the disbursement of the credit, but also could provide evidence for the effective use of that money. So I will show two results before I conclude that sort of capture the value that Earth observation can bring to that approach. If you look at this schematic, what you see in the green and the orange curves are the government reported areas. So those are cumulative curves over a cropping cycle in irrigated rice. The accumulation of land prepared area, that's the one in orange. And then in green is the accumulation of planted area that are reported by government agents who scout on the ground how the agricultural campaign is progressing. Then if you look at the red curve is the accumulated flooding area that is extracted from Sentinel-2 index, like the MNDWI, the modified normalized water index, normalized difference water index. And what is really intriguing is that number one, the accumulation of flooded area very closely fits in between the government reported statistics of prepared land, which is a precursor to the flooding, typically through land leveling and offsetting, and the planting, which is the automatic consequence of flooding, because you will not flood if you know that you cannot plant. You will not plant if you have not flooded, and you will only flood if you are going to plant. So there's a very close relationship between flooding and planting. So satellites, what they do is that they can certainly robustly monitor the process. But what's more intriguing and more interesting is that if you can look carefully at the red curve, you see that there's a first spike in the flooding practice, and then there's a stop, and then there's a second spike. And what we know is that the first spike is typically the practice of all those farmers that have sufficient household endowment and funds to go ahead and plant and flood and plant without having to wait for the bank to provide credit. So they can pre-finance. The ones who come after that are those that are smaller households, typically with less resources, and have to wait for the banks to provide the funding. And this is for cropping season 2023. And we know that for that year, the banks were particularly late holding their credit committees when they decide who they're going to finance and who they will not finance. And therefore, the satellite data is capable of showing you the difference in the tactical response of smallholders to the campaign onset, depending on their endowment level, and also capturing the relatively poor practice of the banks providing credit late. And this is important for the following reason, which is that normally you have to flood and plant within that gray planting window you see on the left. But what you can see from historical EO estimates of the flooded area progression from 2019 all the way to 2024 is that there still is a significant amount of flooding that happens way after the end of that flooding window. The consequence is that if you flood late and plant late, you will harvest late. And if you harvest late, you will harvest under the rains, which means that your rice will lose in quality. The harvester combines will get stuck in the mud because of the rains, and a number of other constraints that mean that in the end, you will not reach your productivity target and you will default. And when you default, guess what happens is that next year, the bank is not going to finance you anymore because you have not paid back your earlier credit. And that is what you see on the maps on the right-hand side. So this is a department in the Delta area of the Senegal River Valley. That's about 30,000 hectares in total rice cropping. And you can see that in 2023, the banks invested about $14 billion in credits, which should cover the cost of cropping about 18,000 hectares. And you can see all that area in green that corresponds to late flooding after day of year 80. And what you look at in 2024 is not only that the total volume of financing that's been made available to smallholders has significantly decreased because there has been massive default in the previous season, but what you can see also more specifically is that all this big green cluster that we had in 2023 implement the cropping season late was not financed at all. So what these schematics actually show is that EO is capable of quite robustly estimating the response and the reaction of farmers to the disbursement of credit, and also to isolate the responsibilities that the banks have in ensuring that people are capable of producing the target harvest on time and then reimbursing their loan. So we are currently working to expand that workflow to the rainy season by combining Sentinel-2 and Sentinel-1 data to address the persistent cloud coverage effect, and try to automate the process of estimating early in the season what is going to be the total planted area, what is the likelihood of meeting a specific target yield level, and therefore what is the likelihood of farmers defaulting on their loan. So this was a quick glimpse over what we attempt to do in using Earth observation to de-risk investments in smallholder agriculture. This is really done with partners who work in very minute digital ecosystems, looking at contracting farmers on an individual basis using mobile money solutions akin to M-Pesa in Kenya, but also reminds us that, as I put it last week, building EO services is not rocket science. It may sound simple, but because the systems that we're dealing with are really much more complex, we actually believe that it is harder. So with this, I want to thank you for your time. I hope I wasn't too long and that this little presentation was useful for some of us. Thanks very much. I'm ready for questions, and I can show a couple of other things if you want.
Yeah, thank you, Harry, for that presentation. Can we just give a digital clap? Yeah, just a digital clap. Yeah. Thank you for Harry for that very insightful presentation, and we've really added to our knowledge. You've demonstrated the power of Earth observation in agricultural finance, soil fertility management, advisory, and even into agricultural meteorology, lots more. So I just want to open the floor for questions. Yeah, please let us just go straight to our questions so that we keep to our time. Question time. Please.
This is Erin. This is Erin Martin. I'm with the Secretariat. I put a question in the chat. I was just curious, Sibiry, if you could talk a little bit more about the capacity building that's had to go into this, and who have you really worked with closely on capacity building, and what has that involved?
No.
Okay, should I wait for the other questions or try to answer right now? Maybe if I can have another one or two questions, I'll compile quick notes for the answer.
Well, Ghana is here. I just want to make a comment. It's a wonderful presentation, and it's the way to go, actually, when it comes to lifting up the other farmers. I don't know if I can go ahead, but that's just I want to make a comment.
Yeah, please. Yeah, please, Gani, go ahead.
Yes, thank
Gani,
you
please
very
go
much.
ahead. You have the floor.
Okay, thank you very much, Bill. It is really waking up the herders, farmers, and the African government generally, when we actually intend, if we really intend to meet up the Africa we want, a document which clearly projecting forward a better tomorrow for Africans. When you look at the Africa we want is about 39 years more to come. And when you add 39 years to our age, and then it means that some of us will still be on the in the service of the art. So there's a lot to do with regards to what has to be done for the coming generation with regard to capacity building, which is very key. But at the same time, the given loan, just as I asked Sibiry on last week, was that we need to look at the land reform. These people have no money, no capacity. We need to make sure that how will government carry out a land reform? The land tenure system needs to be studied to be able to really go into what is the contribution of these holders farmers. They don't have money, but they have the land. How do we bring them together to be able to use technology, to be able to use machinery on their farm? Some of them just have 2 acres, 3 acres, or whatever, which is not what it's having a big machinery on the farm. So they have power. The power is the land. That is their contribution to feeding all of us. We need to find a way to really not tedious in which we need to make the land, mark it out for them with EO, get them to have some kind of power in which they can use it as collateral for, say, we also invest. The government can then say, okay, you are doing this, we are giving you hybrid. They can buy off whatever they produce. They will now share part of that profit instead of selling out their land and not having the opportunity to go back to it. Once they finish the money of which they sell the land, it's gone. So their great-great-grandchildren will not have the benefit of going to the land again. So I really appreciate the presentation. I think we should support this and understand it very well. But I'm saying we should add more and empower these holders farmers. Thank you very much.
Thanks very much. Perhaps for the sake of time, Erin, I will answer the 2 questions, but I see that James and Stephen also, or is that Stephen who just spoke?
No, Gani just spoke.
Okay. So I don't know who's chairing. I think that's you, Erin. Do you want, or Effium, sorry. Do you want to take the other 2 questions or should I reply?
No, please go ahead. Yeah.
Okay.
Erin, okay, go ahead.
I will quickly respond on the capacity building.
Yeah.
One of the things that we learned is that we believe that the ones that we really need to work on capacitating are actually the intermediate organizations, more perhaps so than the smallholder farmers. Smallholder farmers know what to do most of the time when they have the resource. The problem is they don't have the resource, especially the financial one. On the other hand, the banks lack a lot of knowledge about how you work in agriculture. We've been telling them, for example, that you don't finance a farmer the same way you finance the purchase of a car. Banks today provide significant amount of credit to urbanites in Africa for buying assets like cars. But whether your credit is disbursed in January or February or December for a car does not matter much. The car is still there. It will not lose value. It is new. But in agriculture, there's a very strong temporality that you have to abide with. And that is something that we've been working on with the partner institutions so they understand that there is a window, there is a very strong temporal constraint onto the provision of credit to farmers. This elementary, I would say, capacity, they actually lack. They are not organized to be able to deliver the services on time. And because of that, they're creating a lot of harm for the farmers themselves. So I think one of the big targets that we have in terms of capacitation is sharing those products with the boundary organizations that we also call next agents, as they also help deliver their own services to their customers or new customers more easily. The second, regarding the land reform and the land tenure, of course, that's a very complex question, and it has a lot of cultural underpinnings. One of the comments I can say on this one is that what's interesting perhaps for us in the EO side is to understand how can Earth observation reduce the cost of evaluating assets that farmers are working with. But there is a whole other underpinning question that we have to be aware of. What do you do? How do you protect those farmers once you know what they work with or what assets they have access to? Because what we very often see in contractual agriculture is that when, for example, farmers are not capable of getting access to credit through a formal credit scheme with a bank, they may want to get credit from a third party on the black market, quote, quote. And what often happens is that those who provide then the financing for buying fertilizer, seed, etc., and mechanical services, they practice predatory lending rates. And what happens is that it makes it all the more difficult for those farmers to actually protect their assets at the end of the season when they have to reimburse a loan that was provided with a 2-digit rate instead of a 1-digit. And what happens next is that typically the lenders will come and seize the assets. And we see it happening many times in smallholder systems where farmers who are the poorest are actually kicked out of the system progressively by their own lenders. So I would say that understanding how to control or how to better inform shifts in land tenure or otherwise more broad-ranging land reforms have to be very cautious of the potential exposure that we impose on smallholder farmers. That's another comment I wanted to make. Thanks very much, Prof.
Can we just quickly take questions from Stephen and James, starting with Stephen. Stephen, can you jump in and...
Yes, good afternoon. Am I audible?
Yeah.
Yes. Okay, so I just wanted to point, thank you for your presentation. It was awesome. But with the loan period for especially the small scale farmer, is it possible for some authority to have a conversation with the bank to longing the loan period instead of one farming season, maybe to 2 or 3 farming seasons per loan, because the agriculture, as you stated, the farming is different from lending loan for car purchase or other things. So extending the loan period could probably give time for the farmers to adjust in the case of a lost particular season, and maybe they could use the other season to recover and pay back their loan. I just want us to look at it from that point. Thank you.
Thanks, Stephen.
Yeah, okay, thank you, Stephen. James, can you jump in and
Okay, thank you, Prof. I hope I'm audible enough. Thank you for the
yes,
presentation.
can hear you
Pierre.
loud and clear.
Yeah, okay. First, let me appreciate Pierre for the presentation. My comment or question is talking about capacity building for those, the private sector, those that are engaged in providing credits and insurance, because to direct this sector, you need such products to understand how the sector works. Just like he mentioned in PESA in East Africa, because it's a private entity that had understood how this works. Will there be within West Africa, particularly Nigeria, of interest, where we can have capacity building for those, both the technicians, the scientists, and the private sector players? Like we have a lot of private sectors in Nigeria that are into credit and insurance in agriculture. If they can, we can build up a system that they can key into it and make it a system that is viable for the country. Those are my comments. Thank you.
Thank you very much, James. So quickly answering both your question and Stephen, because they sort of reflect each other. One of the things that we have started doing is working with IFC, because IFC has, of course, they are the arm of the World Bank that works with the private sector, and they have a lot of experience engaging with these categories of actors. They have instruments like what they call a risk mitigation framework that we have applied in this case to the irrigated rice value chain, where we identified 219 individual risks that the credit goes through as it is disbursed through the value chain. And there's about equal comparable numbers pre-harvest and post-harvest to tell you. It's a very sophisticated, I would say, system of breaking down all the different components of risk and then asserting how those risks are actually handled today, what would be needed to improve the management and the mitigation of those risks, and providing them recommendation to prioritize interventions by those financing institutions. So this is, from my knowledge, I've never seen a level of detail as the one that IFC is currently implementing. They have developed a program they call the Africa Accelerator Program, which has invested, I think, or earmarked about $500 million US, of which we were beneficiaries through the partners we're working with. It was an $8 million loan for one cropping season. Of course, most of that money goes into production costs, but we also use it to sustain the data ecosystem. And this is the kind of collaboration that we're working on to build that capacity with the private sector, because it provides a standardized framework for risk quantification and mitigation. So if you have interest in that, I could point you to a couple of resources on how that works. And certainly Nigeria, and James and Stephen, I don't know whether you are also from Nigeria, but Nigeria, I've seen things happen around agricultural credit that are really quite worrisome. We know that the interest rate is absolutely horrendous. And we also know that the lenders tend also to have to be bailed out every season by the federal government. So it's a very high cost to the government of Nigeria itself of just running agricultural credit. So we'll be happy to continue that conversation, I think. Thanks very much for the questions. And I hope that in the notes, we have a compilation of those exchanges so we can follow up with all of you. Thank you, Erin. Thank you, Professor Effium, for steering me into this.